Have you ever felt like you're just a few trades away from hitting it big? I've been there. But what if I told you that the real secret to turning $1,000 into $10,000 isn't about making more money? It's about changing the way you think. When I started trading, I thought success came from finding the perfect strategy, some magic formula that would unlock massive profits. But in reality, the problem wasn't about what I was doing, it was about how I was thinking, and more importantly, how I was managing risk. At first, like most beginners, I was all about going big. I put everything I had into a trade thinking if I hit it right, I could make a ton of money. I had no concept of managing losses, no understanding of the importance of risk control. And guess what happened? More often than not, I lost everything. But here's the shift that changed everything for me. One day, after a string of losses, I stopped to think, what am I really doing here? It wasn't about making quick money. It was about staying in the game. What I realized is that the goal wasn't to win every trade, but to manage risk in a way that would let me stay in the game long enough to be right. The first thing I did was step away from the idea that every trade was make or break. I stopped looking at trading as a way to get rich quick and started seeing it as a way to protect my capital while letting the market work for me. This mindset shift was crucial. Instead of focusing on how much I could make on any given trade, I focused on how much I could lose. I didn't go all in anymore. I started asking myself one simple question before every trade. What is the worst case scenario and can I live with it? This shift didn't just save me from losing big, it completely changed how I saw the market. Trading wasn't about guessing what was going to happen next. It was about understanding the uncertainty, preparing for all possibilities, and managing my exposure. The next step was understanding position sizing. Instead of risking a huge portion of my capital on any single trade, I started small. I'd risk just a fraction of my total account, knowing that I could survive a loss and still live to trade another day. I didn't let emotions take over. I didn't let myself get swept up in the excitement of a good idea or a sure thing. This simple change in how I approached risk began to make a huge difference, but that wasn't all. Patience played a bigger role than I ever expected. Early on, I thought that I needed to make money fast. I wanted to hit it big on a single trade. But I quickly realized that trading is not about getting rich quick. It's about consistency and slow, steady growth. I learned to scale in. Instead of throwing all my capital into one position at once, I would start small and only add to my position when the market confirmed my judgment. This way, I wasn't just risking more money. I was using profits from successful trades to build my position, which meant I wasn't betting my entire capital on something that might not work out. Now, this might sound simple, but let me tell you, it was a game changer. By focusing on small, consistent wins, I slowly began to see results. It wasn't a huge leap overnight, but instead a gradual buildup like compounding interest. I turned $1,000 into $10,000, not because I made a massive profit on one big trade, but because I focused on risk management and consistency and let the compound effect work for me. The difference between a losing trader and a successful one isn't always strategy, it's mindset. Once I stopped thinking about how much I could make and started thinking about how little I could lose, everything changed. It was a shift from hoping for a big win to managing risk and letting the profits come over time. It took patience, discipline, and a shift in how I viewed the market. And here's the kicker. Once I had the mindset shift, it became easier to keep going, to keep building. I didn't need to worry about the ups and downs of the market anymore. I knew that I was playing the long game, and that meant my odds of success were better. You see, it's not the perfect strategy that makes the biggest difference. It's the ability to stay in the game long enough to profit from it. Let's break this down, because this is where most traders mess up. You've probably heard it a million times, but let me say it again. The market doesn't care about you. It doesn't care if you have a hunch or an insider tip. It doesn't care if you're frustrated, anxious, or desperate to make a quick buck. The market doesn't care about your emotions. It only reacts to what's actually happening. And if you're not prepared for that reality, you're out of the game before you even get a chance. Patience. Yes, patience is the unsung hero behind my success. In the beginning, I treated the market like a game of chance. I thought it was about catching the next big thing, betting it all of a single gut-feeling trade. But that's not how the market works. The real key to success isn't about playing every hand. It's about knowing when to fold. The traders that win big are the ones who know when to step back and let the market come to them. Instead of chasing every flashy opportunity, I learned to wait for confirmation. Let me tell you something crucial. Every single trade I made after that shift was a calculated move, not a gamble. I started testing the market with tiny positions, not because I didn't believe in the trade, but because I was testing the market's reaction. I wasn't betting everything on my judgment. I was letting the market decide if I was right or wrong. And that's the game changer. That's how I turned $1,000 into $10,000. It wasn't about luck. It was about confidence in managing risk and knowing that I could always come back from a loss no matter how small. But here's where it gets even more interesting. The moment I started stacking small wins, my mindset changed completely. I wasn't playing to win anymore. I was playing not to lose. And that's a key distinction. When you make smaller, safer trades, the pressure of hitting it big is gone. The fear of losing? Gone. It's replaced with a calm, calculated approach where every decision is made with precision, not emotion. Here's something I wish I knew earlier. Your worst enemy is not the market. It's your own fear. The fear of missing out, the fear of getting left behind, the fear that you're doing something wrong. But let me tell you this, fear isn't going to make you rich. Discipline will. Discipline means sticking to your plan, no matter how exciting or emotional the market gets. And this is where the true difference lies. It's about building a foundation of small, consistent wins, not relying on a single trade to carry you through. Now, I know what you're probably thinking, but I want to make more faster. Trust me, I've been there. I wanted to make a killing in the market. But if you're constantly chasing big wins, you're going to trip over small, avoidable losses. So I started focusing on risk-reward. I was never trying to hit the jackpot. Instead, I was looking for trades where my potential reward was much higher than the risk I was taking. This is where most traders fail. They get excited about the idea of a home run trade, but in the process, they end up taking trades where the risk far outweighs the reward. So how do you actually apply this in a real trade? It's simple. I only took positions where I could lose no more than 1% of my total capital. 1%. That was my limit. And you know what? That one simple rule saved me from blowing up my account. Because even when I lost, I knew that I was still in the game. I could afford to lose, and I could learn from every single trade. When you take smaller controlled risks, your emotional state changes too. The fear, the greed, it all starts to fade. You're not glued to the screen, panicking about every little movement. Instead, you're watching with detached curiosity, waiting for the market to confirm what you already suspect. And here's the most important takeaway of all. You can't let your emotions control your trading decisions. The moment you let fear or greed take over, you're done. So how did I turn $1,000 into $10,000? By playing the long game, by taking my time and perfecting my risk management, by not being greedy, but rather patient and precise. I scaled in, I let profits compound, I controlled my risk, and never allowed a single trade to define my entire journey. And here's the kicker. Every time I made a mistake, I treated it as a learning opportunity, not a failure. In fact, those mistakes turned out to be the most valuable part of my trading career. So, here's what I want you to take away from this video. 1, don't chase big wins. Focus on managing risk and taking smaller, safer trades. 2, patience is key. You don't need to trade every day. Wait for the market to confirm your strategy. 3, discipline beats emotions. Your fear of missing out? It's just noise. Stick to your plan. 4, risk control is everything. Don't risk more than you're willing to lose. And remember, it's okay to make mistakes as long as you learn from them. Now, you might be thinking, this all sounds great, but what's the next step? I'm glad you asked, because this journey is far from over. Turning $1,000 into $10,000 is just the beginning. Once you master these principles, the next step is building your confidence to take bigger, smarter trades. But always, always remember, the true secret isn't about making money fast. It's about making money consistently without risking your entire future on one trade. This mindset shift transformed my trading, and it can transform yours too. Stay tuned for more. The road to consistent profits isn't short, but it's well worth the effort. Keep learning, keep adapting, and remember, the market rewards the patient, not the impulsive. All right, now that we've laid the foundation, let's dive deeper into what really separates the winners from the losers in this game. And trust me, it's not about how much money you can make, it's about how well you can handle losing. And here's the harsh truth. Losing is inevitable. No matter how good you are, no matter how many strategies you've learned, you're going to lose, period. It's not a matter of if, it's a matter of when. So what separates the traders who survive and thrive from the ones who give up after one or two big losses? It's not about being perfect. It's about being prepared. It's about having the mental fortitude to accept that loss is part of the journey, but it doesn't have to define you. The key is learning to lose well. The best traders know how to handle a losing streak. Why? Because every loss is just data. Data that tells you what went wrong and what you can do better next time. The amateur takes a loss personally. They think it's a failure of their judgment, their strategy, or worse, their identity. But the professional trader, they take losses as a lesson. A setback, it's nothing but a stepping stone. So the next time you're sitting there with a losing position, ask yourself, what can I learn from this? You're going to want to hit that panic button. You're going to want to bail out. But here's the thing. If you quit when you lose, you're never going to win. You'll never get good at something if you only ever play it safe. The truth is, losses are your best teacher, if you let them be. And I've learned that the hard way. Now, let's talk about a game-changing strategy that can help you rise above the losses, manage risk, and ultimately turn a small account into something much, much larger. The 1% rule. Remember that $1,000 account I told you about? Well, I didn't just get lucky. I used the 1% rule. That means on any single trade, I was never willing to lose more than 1% of my total capital. This rule wasn't just a guideline, it was a non-negotiable principle. And here's the beauty of it. By limiting the amount of risk per trade, I was able to play the long game, weather the volatility, and avoid total wipeouts. The magic of the 1% rule is that it allows you to stay in the game long enough to catch the big moves. Because every time you lose, it's just a small piece of your total capital. You're always preserving the majority of your resources for the next opportunity. Here's a powerful realization I had. You're not just protecting your money, you're protecting your mindset. The more you manage your risk, the less emotional pressure you feel. Your decisions become clearer, and that's when you start making rational rather than emotional trades. But I know some of you are sitting there thinking, but what if I miss out? What if I don't take a big risk and lose my chance? That fear, my friend, is the trap. Because here's the secret. The market is not going anywhere. Opportunities will always come back. You don't have to be in every single trade. You just need to be in the right ones. The right trade is the one where your risk to reward ratio is on your side. If you're risking 1% to make 5%, that's the type of trade you want to take. But if you're risking 10% to make 5%, you're setting yourself up for failure. Let's get real. You're gonna have to learn to say no to most trades. It sounds counterintuitive, but it's the truth. Don't force it. One of the most critical skills I developed was the ability to say no. No to trades that don't meet my criteria. No to trades that were driven by fear or greed. I learned to wait for the right opportunities, and when they came, I didn't hesitate. But how do you know when that moment is right? It comes down to discipline and patience. You need to develop the ability to wait for your setups. The market will always test your patience, and you'll feel the pressure. But remember, the market moves in waves, and the big moves always follow the same cycles. The key is waiting for confirmation. This is where the emotional control kicks in. You see, when you're managing risk properly, you're not in a rush. You're not chasing every single move.
You're calmly and methodically moving through the market, knowing that your strategy is in place and your risk is under control. This is the power of not chasing the market. You're waiting for the market to come to you. And when it does, you'll already have your strategy ready, and the position will be far more likely to work in your favor. And then, when you start seeing profits, that's when you scale in. You don't go all in at the start. You don't take huge bets. You scale your positions as the market shows you that it's validating your analysis. Here's something else I learned. Don't let one win make you cocky, and don't let one loss make you question everything. Every win is a confirmation that your strategy works. Every loss is a lesson on how to improve. You never stop learning, and you never stop adapting. And finally, you need to develop a trader's mindset. The greatest traders don't look at money as the end goal. They see it as a tool, a way to measure their skill, their discipline, and their ability to manage risk. So, what does all this mean? It means you need to start small, stay disciplined, be patient, and scale your risk only when the market proves you right. The moment you take your focus off the profits and onto the process, the game changes. That's when you become a true professional speculator, not a gambler. The truth is, there's no magic formula, no secret strategy. It's about playing the long game, sticking to your principles, and mastering the science of risk management. So, if you're ready to turn your trading into a profitable career, start today. Apply the 1% rule. Focus on controlling risk, not chasing profits, and learn from every single trade, win or lose. The key to success in this game isn't about catching the biggest wave. It's about staying in the game long enough to ride out the storms and leveraging the market's natural cycles to your advantage. If you do that, success is just a matter of time.